That's what broke my mirror.
I'm gonna give it some more time. Let more people join. Danny, can you hear me?
Yep.
All right, cool. Thanks. All right, we're gonna go ahead and get started. So as I mentioned earlier, this is gonna be more of a lecture versus a Q&A. So I'm gonna go over a trade that I had done at the start of the year. And this is the kind of trade that is very safe, but requires a lot of patience. And anybody can make money in the market doing this. You don't have to be a professional. You just have to understand how to read a chart and have patience. So let me share my screen. Let's see. No, not that one. Okay. All right, you guys see my screen, I guess. I assume. Okay. So what I got into LMT. It was a fairly costly stock. I've traded this a while. What I'm used to seeing on LMT in the past was, if it hits a good support level and a certain time of the year with news, I've seen it do a small pump. I typically take advantage of that, 100, $125 return, off of say 2,500 to 3,000 bucks, right? I know LMT works a certain way, so I'm not I'm not really worried about anything in regards to it. Sorry, give me one second. Sorry, give me 1 second, folks. I gotta stop sharing real quick. Damn it, come on, Zoom. God, I hate Zoom. Whenever you don't want the little pop down or drop down bar to drop down, it's always there, but now if you want it to come down, it's gone. Okay. All right. Sorry, just one more second. Okay. So I get into LMT right around the start of January, and LMT is one of those stocks that typically I expect it to make its move within a month. That's about generally the time that I'm used to. Unfortunately for me on this one, it took longer than that. Um, it actually went against me. I averaged down some, and it kept falling, and I'm just not going to throw any more money at it because I have, allocation or allocated cash elsewhere. So kind of dried up, if that makes sense. So with this, again, it went against me. So I got in. My break even was 350. Right, which is, let's see if I can. I'm gonna draw a little uh, red arrow here. 350, 350. That's my break even. All right, it dropped way lower than that. It dropped down 319, and then finally started coming back up. So start of the year. This my positions were like January 2nd, and a week after, and a week after, and a week after, or something like that, based on how the stock fell and my average down limit entry orders initiated. So with that being said, it hit its low, and here I am. A lot of people are going to be in this position or would be in this position, be like, crap, it's down. I'm showing, $500 loss or something like that, and they panic and don't wait. They don't have patience, um, and that's a mistake, right? So when trading shares, patience is key because you will make money. I guarantee, unless you buy shares in a trash stock, right? There's always that risk of something going out of business or just not doing so well for a while. So this one started coming back up finally. And once it hit 370, rather broke through 360, I knew that it was going to continue moving. All right. So once it went through 370, though, I knew that was so there's a gap here that it needed to fill. All right, I'm gonna draw something. That's a small gap, but it's a gap. The yearly shows it, so if the yearly shows it, I'm gonna pay attention to it. That gap right there, and you can tell that it has some resistance in that gap area at the top of it. But I knew that it did off of this one bar, it did a 50% retracement. All right, so when it did that and started turning green, I knew it was gonna keep going. Right, and like I called out earlier, the next level was 380. Right. And what happened when it got to 380? This is a perfect example of volume with strength or price action, right? So I'm going to see if I can draw a really skinny oval right there. All right, so once it hit that 380 level, sorry, that oval is in the wrong spot. This one. Okay, so once it hit that resistance point, 378 is the number actually. Um, 378.52 to be exact. Had some wicks up to 381, but that's kind of I go with bodies, as everybody knows, and candlesticks. I use bodies more so than wicks. They hold a lot more weight. Okay, so once it hit that resistance point, it blew through it. I mean, it crushed it. It smoked it, right? I mean, that huge, massive green candle. And I consider that to be like a massive candle here because look, you got 1, 2, 3, 4, 5 massive candles on this thing. Um, you only really see, and like right here on downtrends, you see big, massive candles. So that's how LMT moves. It does massive candles like that. So big jumps up like $4 today, and then $1.50 tomorrow, down 50 cents, up $4 next day, kind of thing. That's what it's been doing recently in the past. I'd say a month or so, give or take a little bit. So once it broke through that 380 level, that's when I mentioned that I would set a trailing stop loss, right? Because 380 is actually the number that I was willing to take. Right, that's $300. That's the number I was willing to take off the table. So once it hit that point, um, I think earlier in the day it hit that, and then at towards the end of the day it was at like 384. So I'm like, sweet, all right, I'm gonna jump in, or I'm gonna set my trailing stop loss now. I'm gonna do it $3 from 384. I think that's a fair number. If it drops $3, then it's probably gonna double that. So what it ended up happening was with my, let me go closer. That's not gonna work. With my trailing stop of $3, and I'm going to show you all uh, an actual number here of what it really gave me versus what it should have gave me based off the math. So 390.26 was today's high for LMT. If I were to, so when I set my trailing stop, it was $3. And first, let me pull that up. Where was it? Just so in case anybody hadn't seen it. Having internet issues, obviously. Look at that. Beautiful. Okay. Just open original. All right, everybody should be able to see that. So you can see that my trailing stop here is 3. It's a $3 from the stock price. And I chose to do it by points, not percentage. I'm more comfortable with points because I know exactly how much I'm going to lose. With percentage, you got to do some math, and it's just better this way, in my opinion. You can kind of get a percentage based off of what you want and then do points. All right, so $3 off of the price of 390.26. All right, that number should have given me 390.26 minus $3 is 386.20. I'm sorry, 387.26. What it really gave me, let's see. Okay, let me sign into my account again. Let's see, can't remember if I had a screenshot. Okay, what it really gave me was here on my screenshot, 365.31. All right, so 365.31. There's a discrepancy there. All right, 365.71. I'm $21.55 lower than my trailing stop. Right, so that tells me that it probably moved quickly, so quickly that when the mark finally stopped moving in a direction, that's when it picked up my trailing stop that I had set higher than that number. So once it reached a settling level or a settled level, it ended up not necessarily settled, but it kind of seesaws for a second. So the buyers come back into play and then it drops again. And you can see exactly right here. This is exactly where it did it. Right. So it picked it up at 387. Like so 387.21 was my number. Right. So it dipped here. Um, when it opened, rather, it was already low. Right. So this candle is actually probably the one where my order woke up. Um, I'm not sure, to be honest with you. Let's see if I can get a timestamp. See if that has a timestamp. One second. Once I get through all this, I'm gonna go into why I decided to get into this trade and how I decided to get into it, and I'm gonna show you on the chart and everything on that stuff here shortly. And I'm gonna kind of generalize. That's not what I wanted that damn thing to do, but you can kind of generalize what I'll be trying to do here. So realized gains. That was at 10:44 a.m. So if I go on here, look at 10:44 right here, initiated somewhere right before this green hash mark. So that's, I mean, again, it's not exact, unfortunately, but as you can see, even with shares, if the stock price moves quick enough, fast enough, even a trailing stop or a stop period may not initiate on the price you wanted. Imagine with options, with implied volatility and bid-ask spreads, and those numbers changing rapidly and often, that can make it just jump right over your stop, and it'll never initiate, right? So that's something you got to really pay attention to with the options part of this. All right, so now that you all see how the trail and stop worked, and again, my profit was 365. It's can't complain, right? I mean, yeah, it sat for a good 3 months, 3 or 3.5, maybe three, somewhere around there, right? It sat for a good little bit, but prior to COVID, that's kind of how the market was, right? Let's say you picked three stocks, one out of three is gonna show you the profit you're looking for in a month. One out of three is going to do it in 2 months, and one out of three is going to do it in three. That's a realistic way the market used to work. And I'm sure it's going to get back to that once everything starts to get settled, less volatility, less chaos in the news and all this BS. Then we'll see the market kind of go back towards that direction of less volatility, more long-term holds you have to do, like 1 month, 2 month, 3 month. Right, so this is, again, pre-COVID. That's what I'm used to seeing. Right. All right. So with that being said, LMT. Why did I get into it? Well, I need to go a little further back. I don't know if 3 years is going to work. Maybe 3 years will work. All right. So this is COVID. Okay. So as you can see, this 348 level is solid support as far as candlestick bodies go. Right. And that's what I was using as my bearing. Two massive solid support levels right here. Right. And I initially started my entries somewhere here, right? And I didn't start with too much at first. I did like one share. I do one share. It goes down $5, do another share. It goes down $5, do another share, and that kind of thing. So that's kind of what I was doing here. But I was trying to play it off support. And the beauty here is if that's something that looks like a pretty good support level, there's a very likely chance that even if it goes past it, it's going to go, like, even if it goes below it, it's going to come right back above it at some point in the near future, which is exactly what this did. And that's the beauty of trading off of support, because we know that when you trade off of a support level, it's at a low. So the probability of it going in your favor is a lot higher. You've got mathematical statistics on your side when it comes to that. So that's why I recommend always trading this way. And it's a very simple way to trade for any new traders. All you need to know is support and resistance, and know how to get in and out of out of buying shares. Limit entry orders, limit exit orders. Trailing stops are amazingly beautiful for any share trader whatsoever, right? If you get into a position where it hits your number, your profit target, and you can babysit it for the next day or two, and take profits on something pretty quick if it starts to kind of go the other opposite direction. Or if it pumps again, then you can set a trail and stop with that pump difference, right? So now you've locked in your profits, and that's the beauty of a trail and stop. It locks in your profits with shares. and it's guaranteed to initiate. I've never set a trailing stop where it didn't initiate. Now, obviously, they don't initiate exactly where you want them to, but somewhere down the line it will. And pennies really doesn't make a big difference, especially in this scenario. From 387, what was the number? 387.21 or something like that, 387.23, and initiated like 20 or 30 cents less. I mean, that's really pennies, honestly. Um, Now, as far as percent return on this position, well, as a whole, I had 3,500 bucks in it. I made $365. So the math in that is a total of 10.3% return on 3,500 bucks. Right, and that's okay. That's not great. I mean, I'm satisfied with it. Obviously, it's money's money. It's green. It's a few hundred bucks more money than I had yesterday, right? So in this scenario, it's like I had a profit target percentage of 8%, and I was thinking it was going to happen within a month, and I clearly got that wrong. But again, having patience and understanding that the market's going to do its thing, and it's going to come back up, and it's going to blow past your support level, and it's just going to keep going. That's something you got to really keep in mind and remember. Right. So as long as you're trading off of a good level, there's really nothing to worry about when trading shares. Again, disclaimer, other than trashy stocks. Right. So that's important to remember. If you're trading trash stocks, then that's obviously could be a bad situation. Right. Let's see. I think that was okay. All right, so I'm gonna go over the mindset here. Is in my head when I got into this trade, I knew I wasn't gonna make massive amounts of money, but I do know that I've traded LMT for years, and I've made again hundreds of dollars off of this stock. So I like to try to flip it and swing it within a week or two if possible. All right, that was my expectation. Uh, or mindset expectation was a month, and again in my head though I'm prepared to go the long haul if I have to, because I'm not going to take a loss. Like it's pointless to take a loss. Some people argue that you know oh, I could take a loss here, put money into this, and then I can make my money back plus some with that. Well, yeah, you could, but there's also a 50-50 chance that that goes against you too, and now you're down from the one you realized the loss on to one you unrealized the loss on. So that's why I always argue that you know if you've got to hold a position, hold it. If you've got more money, put it in, put it in your trade account. Don't throw it at the thing that you're down on unless you're confident and it's low that it's going to pump back up, right? So keep that in mind too. That's not something you really want to do unless you have confidence in it. So as far as that size positioning, this was about, well, let's see. I don't remember, and I think my account total was 10 102. Had 3,500 in it. Okay, so that's 3.4%, right? Now I mirror my wife and my account, so her account has exact same amount in 3.4%. All right, so I kept it between 2.5 to 5% of my total portfolio per account, if that makes sense. That's a little bit more aggressive than most should do, but that's how I trade. And I'm confident how I trade, obviously. So, you know, everybody kind of needs to develop their own comfort and confidence levels to be willing to basically do 6.8%. I mean, that's honestly, most people do way more than that, which is a bad idea and a mistake. This is 6.8% of my total account if you really want to make the numbers right, um, due to having two accounts. But with that being said, 3,500 times 2 made 365. So 7,000, 365 times 2 divided by 7,000. Again, 10.4% return, right? So had I traded my whole entire account and made 10.4% on every single trade, my whole entire portfolio would be up 10.4% for the month, if that makes sense. Okay, so I think I did go over my exit strategy, and I did go over entry, but I just want to specify that my entries were not all in at once. It was one at a time, just slightly throwing or building a position rather. I think it's important to understand with shares, sometimes you have to build a position, or if something goes against you, or I mean, again, when I trade shares, I always have the expectation that it will go against me so that I can get it at a lower price. Or I want to go ahead and get in because I think the price is fair, but at the same time, if the prices fall, that's good for me because now I can get it at a cheaper price. And my total position size grows so that once it does start showing profits and percent returns, that percent or that position size being greater is going to show a greater return, right? All right, so with that being said, I'm going to stop sharing and let's see if anybody's got any questions. Feel free to raise your hand if you have questions. I'd like to keep it specific to the topic at hand. Um, that way, everybody that's interested in this topic, we can hopefully help answer questions that they may have or be thinking. So, uh, Laderick, go for it.
Yes, sir. I might have got here a little late. My problem is my exit strategy. I feel like I'm holding the options too long, and a lot of times I'm losing a lot of money by doing that. Could you go over your exit strategy again?
Well, I'm talking about shares here specifically, but
Okay.
you know, it's not really gonna apply to options, and I don't buy options as well. I sell options. So I mean, I only ever recommend leaps or long-term option buying positions to give yourself the chance to dig yourself out of a hole if it goes against you when you get in, right? So I don't really like long-term or short-term stuff because you just don't leave yourself any time for um, the market to go up and down and swing while your position decays. So if anything, you shouldn't be doing short-term stuff. Period. I mean, I can be willing to bet no one here is as good as Tilio. So unless you're as good as Tilio, you probably shouldn't be doing um, short-term contracts unless you're scalping for the day. You want to scalp for the day? All right, whatever. Do a week contract. Don't really matter. But if you're trying to swing something, you better not be buying a week or two or even a month. You give yourself a lot more time. I mean, look how this position of LMT that I'm in, it took 3.5+ months to show profit. Had I been in an option, that thing would have died. I ain't got nothing for it. All right. Do you have any other questions, Ladder, before I move on?
No, I mean that pretty much makes sense. I get what you're saying.
Okay. All right. Latasha, you there, Latasha? Okay, we'll come back to Latasha. Um, let's invest.
Hey, brother, you hear me?
Yes.
Hey, so I was wondering, I made a couple bad plays this last month in for long term investing. Uh, I invested in a couple stock or a couple shares of a couple different stocks, and I'm down right now. Um, I haven't really that's what I'm gonna probably do after this is like try and set up that support and resistance because I'm still trying to figure out graphs as well. But probably check the support and resistance on most of them, but a lot of them, or I mean, not a lot, like a good majority of the ones I was kind of looking forward to going up, took a little dump on me. So is what I was wondering, like, would you, yeah, like, would you invest to try and bring your average down and then just break even? Because I mean, I would be fine with like really just probably dumping into it to bring my average down, and then I mean I'd be comfortable just making my money back and getting out of it. So
Well,
I
I
mean,
mean,
what?
so if you want to get in, if you want to throw money at something just to break even to get out quicker, um, my question is, why did you invest in it from the get-go if that's what you're going to do now, right? If you're going to average down and bring your break even further lower, then the profit target that you had in mind before, it should still be in play, right? So you should make more money. So I'm not understanding, unless
Uh,
you think you
because
made a mistake and the stock's trash, or something like that.
there is a couple that I feel do have some potential, but they're just not showing right now, and I'm not too happy with it. And then there is some that I feel that I didn't really do my own research. I heard word of mouth. I mean, from family, but I mean they've made some good calls. Don't get me wrong, but I ain't putting it on nobody. But they just said, hey, like this is a cool price to buy. It's probably gonna be going up soon, this and that. And I bought a couple different things, and then also from elsewhere just word of mouth. Like I was just seeing some stuff, and it was getting a good little boost. But that was probably my problem. I got the fear, I got that FOMO, and and I seen it going up, so I grabbed some stuff of shares a couple different things, and that's where I'm kind of sitting. There's some stuff I do feel that does have some potential in it, but I see potential in other stuff more. So those I would like to get out of, and then yeah, there is some stuff that I really haven't looked into like that, and I just want to get out of it because I do see potential, like I said, elsewhere. So and it's
Well,
bringing my port down. Like my overall everything else in my port is like pretty proper, like, but the stuff I recently bought, and fear of missing out, it ain't hurting my portfolio, but it's definitely down, you know.
well, I would probably hold on. Like I don't know, man. Like me personally, and I've been in this one position for 4 months, and I waited long enough to make money. Right? That's my philosophy. Like I'm not gonna get out of something unless I think it's gonna really go against me. Like let's say, here's an example. There's a company that I got into over the summer last year, or maybe in the fall or something. I can't remember exact time. It's called Francesca. I bought shares of it. Um, it went against me pretty badly, and then declared bankruptcy or said that they were going bankrupt or something like that. Or they're potentially going to go bankrupt. So here I am, already down 25, 30% on position. And I'm like, shit, these fools talking about bankruptcy. Well, after about a month, I just set a stop, sorry, a exit order position above my break even, but in an area that I thought was fair, that I think that I felt was reasonable that they would return back up to, and they did. And I ended up exiting that position for about 15% return. I was looking for about 50 to 60 because the way they were moving previously, before they announced bankruptcy, right? So, um, I think you really need to look at what you're in and look at uh, historical data as far as where the stock's been and what trend, overall long-term trend it's in, and really, do some analysis on a position before you make a decision, right? You're in positions, do analysis on them before you make a bad decision and get out at break even. And then let's say whatever you're in pumps really hard and you just lost out on a lot of money, a week before you or a week after you got out, right? So make sure that what you're doing, that you're not just breaking even on everything. That you're like, well, I want to break even on this because I see potential in this other one, and then you get out of that with break even, get into this one that you thought had potential that doesn't now, and now you're in the same position. Oh, you know what? I need to get out at break even so I can get into something else with more potential. I mean, I've been there, right? I understand it's a deadly cycle, and the way to get out of that cycle is to do the analysis, right? And before you get into it, preferably. But if you're already in it, do some now and try and understand what are the what's the outlook. What's realistic for the stock, and if it shows profit, then hold it, right?
Right.
But I can't tell you specifically. You're gonna have to, obviously do the research and analysis yourself. I can, however, tell you on my channels on the Discord, there is training videos on support and resistance. So if you look in my channel, you'll be able to find that on YouTube, the link in my channel. So if that's something you're struggling with, feel free to watch that video.
Definitely. I appreciate it because I'm definitely trying to get it more down. I see your or I see in your screen it didn't look, that's why I was wondering if you made your support and resistant lines because I didn't see, I seen your MACD, your volume, because I'm still like on Weeble, I can't find the support and resistant lines on the indicators right there. So
You have
I'm
to draw
still
them.
okay, you do, okay.
Yes.
And I'm literally about to get on. I just made the TOS account the other day. So I'm gonna work on just trying to do on that platform, um, and get in on that because I'm mainly right now I'm on Robinhood and I have Weeble, which I'm barely on Weeble, but I'm trying to learn it more, the graphs and all. But everyone's pretty much on TOS and they like TOS and uh, I just got it, so I'm gonna work on that. And everyone's I hear that's probably the best way, like that one. And I mean, I hear TD and Fidelity. I mean, a couple of them, but I'm liking the platform so far. So I'm working on that to work with y'all kind of on the same thing.
That's cool. Well, good
But
luck.
thank you. I got drama on TOS, right? Or as well.
Yes.
The support me. Okay. Yeah, I'm gonna learn that. I'm gonna go watch some videos when we get done here.
All right. Cool.
And thank you. Appreciate it.
Yeah, no problem. Okay, Latasha, are you here?
Can you hear me?
Yes.
I've been trying to do this for the longest. Okay. You were saying something about, let me go to I put it in the chat. Let me go up there. What is a 50% retracement? And then I wanted to know when stocks break their resistance, do they always keep going? Is there like a rule of thumb when you all say that it broke resistance, so it's just going to keep going?
No, that just means it had a lot of strength in this scenario. Sometimes things will hit resistance and then get pushed back down. So it could
Well,
go
how do
either
y'all
way.
know how do you all know if it's going to break it or bounce back down?
We don't really know. Um, it's just a lot of analysis that adds up, right? It's not like one thing that tells me, oh, it's gonna go through resistance today, or when it hits this level, it's gonna go through. Like there's nothing that I can say, um, or be able to tell you, okay, here this is when to go, or this is when to get in, or whatever the case.
It's just by experience, just you just start to know the more you do it, right?
Yeah, absolutely. I mean, with experience with anything, really, you become knowledgeable to where you start to recognize stuff, and you start to see things on the chart. Like, I don't need to draw support resistance. I only draw it for the class. Or when somebody asks me to draw something out for them, then I'll do it. But for me specifically, I don't need to, because I can visualize it without even drawing it because I've done it so much. Right, so that's an example of experience where I'll just look at a chart and tell you exactly where support and resistance is without drawing lines. A lot of people, when they first start out, they're going to have to draw lines to be able to really understand where all the points are. But again, I've done it thousands of times, so I can see all of the points, from a holistic view. That's another reason why I like longer time frames. When you're 1 week or when you're 1 day and 180-day time frame. But um, as far as potentially seeing something break through resistance is a trend change, right? Something that shows you the trend is potentially changing or has changed, right? So I'll show you an example with LMT right now since I got it up here. Is it screen one? Screen one. Okay. All right. So I assume you can see my screen. Yes.
Yes.
Okay. So with LMT, let me go closer into the linear. With LMT, we had this downtrend, basically from the high, really, all the way down, right? And there's nothing really. I mean, this right here kind of gives it a trend change in a sense, right? Because it had a downtrend, then reversed, right, and then kind of just went sideways. Um, Continued downward, in my opinion, right? So broke through its ultimate support level over here, right? At some point, it hits a low and starts to reverse. And the key indicator that I would look for when I think something has reversed, so it's hit a really low low, I think it has reversed. So let's say right now today we are somewhere right here on this little circle, right? So what I'm seeing here is it's first testing that most previous resistance point, right? So let me see if I can, yeah, all right, there you go. So let me just remove this, okay, so you can see this red candle and this green candle.
Right.
This is the most recent resistance, and the trend changed, and this isn't a confirmation, right? This is kind of like the trend may be changing, right? So you see this, okay, maybe this is a good time to buy, and I don't know, maybe, could be, could have happened here, same thing, right? Two exact same candles, right? So the first indicator is it went to test resistance, the first point, the most recent, okay, and it bounced off of it, but with weakness. There's a lot of wick on that candle, right? So if there's body to that candle, then that tells you there's a lot of sellers. There's a lot of strength in sellers. If there's a lot of wick to that candle, then that means there's really not, there's resistance, but there's not, they don't control it because there's a huge wick, right? So then the next candle, it rips past that resistance point, right? I mean, it crushes it. It goes from 332 all the way up to 338, right? Crushes through it, meets the next resistance point with that same candle, right? And falls, right? And then tries again to punch through, right? And then again it falls, but it's still in an uptrend, right? Because it needs to break through down here in order for it to go bearish again, right? It has to break through a support level to become bearish, and it has to break through resistance to get more bullish. And that's what we're going to see here. So again, it tried to retest this level, right? And it's not a very strong one. Don't get me wrong. I mean, it's not super strong. I can't really, identify a lot in there. Let me see if I can go 180. Hold on, I gotta find time frame on that. Where was I? Where was I? Right here. So that's okay. So at this point, let me make sure I'm in the right spot again. Shit. Okay. So I think it's right here where I was just discussing. So no, it was right here. That's right. So at this point, you know, it hits a pretty decent resistance point, and I'm gonna draw. We got resistance here, which is actually support. So when a stock is coming down and it creates a support level, if the stock breaches that support level and goes below it, these support levels now become resistance when the stock is trying to get back above it, right? And that's what we
Oh,
saw here. That's what this thing did. So right about there, right? So it's kind of an average between the two, right? And these two candles right here are really large and they equal each other. So I would say that, you know, the break even of this support level is probably somewhere a little bit lower than where the line is. I actually drew a little too high because the wick still kind of goes through the line, but you get the point, right? So it tried to get through that support level, which is acting as resistance, fell, right? And here's a great indicator that tells me this is still really bullish, regardless of it falling pretty hard. It created a gap,
yeah, it's a
right?
gap.
And that gap right there tells me this massive selling strength is going to die, right? Short term, especially at a low like this. And that's exactly what happened. Trying to retest that same level, right? That resistance point that it bounced off before. Here's a wick. Here's one that's kind of trying to get there. Here's another one. And here's a body that touches it. And then you got another one that kind of tries to break through finally and makes it through. And it does it with strength. I mean, you see it goes from 347 to 355. That's another $8 jump. So the first big strength jump above resistance was $8, and then the second time was $8, right? And again, we got resistance points, and we have this historic downtrend line, right? And that historic downtrend line is basically from its high, and I just drew a trend line from all the tops downward, and then I started obviously drawing like support levels to try and find where the bottom might be, and um, the significance of this trend line is once it breaks through, it's going to run, right? So you can see how this little candle, I'm not sure if you can see that. No, it's too close. Let's see. This little candle right here, so it's actually combined on the bigger section. It looks better. It looks better here. But as you can see, this little candle right here, it it really wanted to push through it, and I believe if I could get close enough into that, you'll actually see the body close above this level. And that's an indicator that tells you bullishness is on the way. As long as that body that closed above that level that it needs to stay above, and the next body opens above it and closes above it, that's bullish strength, right? So once it did that, again, it got to this downtrend line, and this one little candle right here, you can see the sellers really tried to keep it below that trend line. I mean, literally, the body of that candle is under the trend line, and then it's got a massive wick that goes through it. So again, that's another really solid indicator right at this trend line where the buyers are trying so hard because you can see the the I'm sorry, the sellers trying so hard to keep the price down, where you can see the buyers have so much strength that it created that huge wick and it still stayed green, right? The next one just, again, went through that trend line with super strength, crushed it with a massive candle. All right. And when I was talking about 50% retracement before, this area right here is what I was referencing. Let me see if I can.
Are you saying it dropped 50%? It
No,
went down?
no, I'll show you what I mean. Well, let's see if I can. Okay. Now remember, just very recently I said when looking at candles, I like bodies, not wicks. So when I do,
Not wicks.
yep, when I do support, when I do resistance, I really try hard to use bodies. I'll use wicks if they're there, but bodies are what I go for. 50% retracement is. I know it's a little hard to see. Hopefully you can. If you can see my crosshair, let me get another. So my crosshair is going to show or draw a red arrow. That red arrow represents from this big candle here to the top. So from the bottom to the top of this big candle, I consider that to be one wave, in a small wave and a bigger wave, right? When something creates a massive candle, I consider that to be like a mini wave. So when it does that, I say, okay, if it bounces, or when it bounces, because it will, it always does, not just going to go huge green candle and keep going with a bunch of massive green candles. It doesn't do that. So this jumped up, and I knew there was going to be some kind of small little retracement on it. And again, remember I talked about this gap. It retraced 50% from the bottom of this candle to the top, fell 50%, right? That's where this candle intersects with this 50% line, and then it jumped. You see that? 50% retracement is a great bullish indicator when you're in an uptrend, right? Beautiful. And in a downtrend, a 50% retracement is a great indicator to see something pump while it's going down, and then it continued downward, right? So it's just kind of basically the opposite of this. Do you understand the concept now of what the 50% retracement was
Yes, I
for?
do. Yes, I
Okay,
do.
perfect. Did that answer all your other questions, or do you have any more?
No, no more questions. I'll watch videos, but that answered a lot.
Okay, great.
Thank you.
You're welcome. Okay. Who else has questions? Please raise your hands if you have questions. It's hard for me to watch the chat. But I'm going to attempt to go through the chat. It's fairly long, so I'm going through the chat here to make sure, or I'm going to read everybody's questions. If someone that asked a question in the chat is not here, I'll just briefly answer it, so maybe they can rewatch it later. I can't help with calculating a stop loss though. I'm gonna have to, I guess, be here so I can show you Miles, who's not here. Okay, I'm gonna jump to Wade since he's got his hand raised. Go ahead, Wade.
Hey, can you hear me?
Yes.
Okay, so I've got a question, and I think it makes sense. Okay, so let's say you were in two different stocks. You were in stock A, which is $1, and you were in stock B, which is $1,000. Would you be more impressed? I don't quite know how to word it. Would you be more impressed if A went from $1 to $50, or if the stock B went from $1,000 to $50,000? Or are they kind of the same?
I really only look at percent. Percent's more important to me than dollars.
Okay, so it would be the same percentage. So you think they
Yes.
would be the same trade practically?
Yes.
Okay, that was all. It's a very small question. That's all. Thank you.
Sure. I mean, when you boil things down to percentage, it makes it a lot simpler. It's a lot easier to understand. It's a lot easier to find profit targets and entry points and all that kind of stuff. Versus, okay, if it goes up $20, or if it goes down 5, or if it does this or that, as far as dollar values go, it's a lot harder to really concentrate on a strategy and a goal when the goalposts are continually moving. But when you go after percentages and you can say, okay, I like 15 to 25% return, I'm always going to stick to it, et cetera, et cetera. I mean, then the goalposts don't move. You continuously do the same thing over and over and be consistent with returns.
So ultimately, you don't even care about the number. All you care about is the percent.
Exactly. I mean, because if you
Okay.
think about it, if you got $500, you got 5,000, you got 50,000, you got 500,000, you got 5 million. Whoever makes 10%, or if they all make 10%, it's still all 10%. And that guy at $500, and someday down the road will be at 5,000 if he's smart about it. And the guy at 5,000 will be at 50, and the one at 50 will be at 500, and the one at 500 will be at 5 million. The percentage, as long as they continue down the road of that same percent goal, when they got 5 million, 10% is 10%, but with 5 million, not 50,000 or 5,000, right? 10% of 5,000 is 500, but 10% of 5 million is 500,000. I think I'm going off the top of my head here, but you get the point. The percentage of it really matters. As long as your account grows and compounds over time, that same percent is going to grow. $100 will grow into 1,000 return, and then $1,000 will grow into 10,000 at some point with the same percent return, as long as your account grows. Does that make sense?
Yeah, that was kind of the vibe I was getting. I just wasn't quite sure if it's wiser to buy less of a stock that's more expensive or more of a stock that's really cheap, with the expectation of the same percent for either one.
Well, I would say don't go for something really cheap, but don't go for something really expensive. Try to go somewhere in the middle of your. So I guess it's different for every person. What's your account size?
What was that?
What's your account size?
$700.
Oh, well, with $700, I would say you should put $700 into one stock and grow that account until you get to 5,000-10,000.
Yeah, I've got I think like 630 right now in Carnival, just waiting for it to boom back up whenever.
Yeah,
just holding.
I got you. Okay. All right, cool. Yeah, just stick to percentages, and I promise you'll see bigger gains than you thought you would have. Especially if
Okay,
you
appreciate
go
it.
for the long haul. Yeah, you're welcome. Okay. Austin, I believe, was next.
Hey, I have two questions. So my first question is that when drawing your support and resistance levels, well, I do options, so it's like that's on the like shorter scale of things, so that wouldn't be necessarily long term for me because I don't really do leaps. But doing options, when you when you look at price action, if there's a support level, because I at a specific stock that I'm looking at, I see where there's a support level, but then right above it is the EMA line. So it's like, which one do I take into consideration as to which one is going to either the EMA line or the support level that's going to dictate where the price is going to go or what it's going to really bounce off of.
You know, how many days you got? How many days you talking about with that EMA line?
Um, I'm not really sure. I'm learning all of this stuff. Like I'm a beginner, so
So there's a simple solution to your question. Simple answer, I guess. I'm gonna assume that EMA line is anywhere from 15 to 30 days. Um, when you draw support and resistance, you want to go out 30, 60, 90, 180 in a year to find support and resistance. Right? That's the 15 to 30 day EMA line is not going to have the same value as 60 days and beyond support level or resistance level.
oh, so basically I've been drawing my support and resistances wrong because you want to draw your support and resistances from a larger time frame to get a more accurate
Yes.
support and resistance.
A much stronger level. Yes.
Okay. And the another thing is that when it comes to creating stop losses and things like that, since I'm new, I'm changing the way that I look at it because a lot of the time I used to look at just the dollars instead of the percentages. So when I look at the percentage of like whether I'm down so and so percentage or up or I'm up so and so percentage. Let's say if I buy an option at a specific, I don't know, let's just say I bought an option at a strike price of 50 cents. So it costs $50. What should be like the rule of thumb of, okay, how much should I put as like for a stop loss on a particular option?
So, as I was explaining earlier, I don't know if you're in here, stop losses aren't as reliable with options as they are on shares because stop losses with options, I mean, you got to know that options require uh, a layered approach, right? Options, the bid-ask spread, you got buyers, you got sellers. If one side's lopsided versus the other, that's going to affect the price of those contracts. The implied volatility, if you bought low and the price moves up, that's going to benefit you. If you bought when the IV was high and it goes down, that's going to hurt you, even if the stock price goes up, right? And open interest. Is there open interest? These things are going to make a difference. And those are going to affect whether or not that stop loss is going to initiate sooner rather than later. And chances are it's going to be later. Because if you didn't set a stop at a certain level, such as support, then trying to set it somewhere in a range or an area in between the point you're at and resistance or support rather at the bottom, there's a chance it's going to fly right past it. So I guess the short answer is if you're going to do stop losses and you're going to do options and buying options, short-term stuff, and you're worried about taking losses and you want to set stops, then set it at a support level, somewhere where it's got strength, somewhere where it will pick up that contract pretty quick, right? Somewhere where if it's falling quickly, it's going to gather strength at a support level, and then your contract's going to get executed versus if you're in the middle of somewhere and there's not a lot of strength there, it's going to blow right through it and never initiate. That makes sense? Sorry, I got to unmute you. There you go.
Yes, it makes sense. So just to clarify, so the reason why stop losses may not work particularly on options is because if it's like in the midst of a particular move, making a particular move, no one may be interested in buying it in the midst of something, but they would rather buy it at a particular like support level or resistance level because they probably think it's going to make a certain move when it gets there.
Well, I wouldn't say that people aren't interested. I would just say that there is a movement in the price that's been forced past your area too quickly, right? So it's going to move so fast. Basically, the sellers would be in control and they force the price down faster than your stop loss can initiate and even see the order or see the value cross its threshold. Like it might go from, so let's say your contract costs $300. You got a stop loss at 250, but that stop loss at 250 is like an area on the stock where there's really, not a lot of strength. There's not a lot of people actually trading shares. It's just kind of a level that you said, oh, you know what, I'll take 5% loss or something like that, right? Just something off the top of your head. Um, let's say it's at a resistance level and the sellers jump in action and take over and start crushing it. Well, it's going to fly so past your past your stop loss. That stock or that option might fall down. So that might go from 300 to like 125 within 5 minutes. It can do that, or even less. It could do that in 30 seconds. It could go from $300 in value to 125 instantly, and that stop loss you had at 250 gone. Not going to initiate. So you get to find support levels, areas where the price of the stock is going to slow down and buyers are going to come back in and try and slow it down from falling further. Now, trying to determine where that fits as far as your contract value, that's tricky, right? The best way I can say to determine that is to look at the chain, and you can determine. So let's say, give me a ticker that you're looking at or something.
I just picked one like Snap.
Okay, Snap. Let's see.
And while you're looking at that, so let's say if it's in the midst of something, right? And let's say it's in the midst, like in the middle of a resistance and a support level. It's like in the middle of it, and you're not clear as to, will it just blow past it or, will it meet the threshold? Is that when you want to use? Is that an instance of when you want to use something like the Fibonacci tool, or no?
No, Fibonacci is more of something that you try to determine where the stock might bounce at, and it'll tell you percentage retracement levels on the Fibonacci. I actually made a video of the Fibonacci. I'd recommend you watch that as well. It talks about 50% retracement and the Fibonacci. Definitely check out that video. You can find it on my Discord channel, the link there. As far as like Snap, so I think what I was going to show you is how to kind of get a good estimate on what the value of your contract might cost at a certain level, right? So let me share my screen again. So I'm on Snap, 14 days out expiration. Let's say you buy the 64 strike at 445. And you want to set a stop at say 10%. So what's 10% of 445? 10%, $45. So at $400, you want this to exit. You want it to initiate its trailing stop, right? So at $400, that's that's probably not very much. That's going to be 50 cents, right? With options, it just moves quickly. So you can see here, one strike to one strike. This is $20 difference. This is $25 difference. This was 20. This was 25. This was 25. So roughly $25. And if you really want to get specific with it, there's a way with Delta, Vega, Gamma, that kind of stuff. The Greeks, which I also made a video on that explains them on how they affect each other. You can literally determine down to the dollar how much your contract will be worth if it moves X amount of strikes, right? So do watch that video. I think that would be very helpful for you to understand, especially if you're trying to set stops. You can look at an option contract and say, okay, do a little bit of math, and you can determine, all right, at this strike price, for example, say, let's say it goes against you and stock moves up when you bought, I'm sorry, the stock moves down when you bought an option. The Greeks are going to be able to help you understand down to the dollar what it'll be worth at a specific strike. Right? So I think it'd be very beneficial for you to watch to understand. So you can potentially, this could help you set up your stop loss in a way that makes it very unique to what you're trying to do. If that makes sense. I gotta unmute. There you go. Do you have any more questions, Austin? That help?
Oh yes, it helps.
All right, cool.
Thank you.
Welcome. Okay, X, you're up.
Hey, what's up, man? Thank you for having me. Thank you for this live stream. I appreciate it.
No problem.
So my question was, do you use any options order flow services to help you make better trades?
No.
Okay, so I mean, what is your opinion on like options order flow stuff? Because I feel like people online use it. They say it's good, but I don't know if it's good or not, really, or
Well, I
if it's
think
good for day trading, maybe.
I think it's something that advanced people can use for a strategy that they've been doing for a while, and they can add this on as a cherry on top. But beyond that, if you're going to try to use it as your advantage in the market, it's not going to be an advantage. I promise you. I mean, there are good things about it, but I think you need a lot of experience to really understand what you can find useful out of it, if that makes sense.
Yeah. Okay. So it's just like with more time, maybe it'll make sense.
Yeah, I mean, I think you should concentrate on something else like chart reading and technical analysis. Because if you can't do those, then that flow bot's going to be squat for you.
Yeah.
I'll be
No, that's
honest.
true. I mean, for me personally, I do know how to use technical analysis and stuff. I was just wondering your opinion on like to get more advanced for me. Like I feel like I got past
Learn option selling.
option selling. Yeah, option selling too. I do that. I do mainly like credit spreads,
Okay.
which is usually pretty good. But I was also gonna ask you, what are the since I'm also kind of new to day trading, I came from stocks basically. What are the best basic indicators or like and the to use for day trading?
I don't know. I don't day trade, so I don't have an answer for you on that. I mean, if I day traded, then I would probably say, this or that, but my style of trading is not day trading, so what I would tell you may or may not work for day trading. One indicator that I can say that people use quite often for day trading, though, is going to be the VWAP.
Yeah, the VWeb. I use that too.
So, I mean, but beyond that, man, like I don't day trade, so that's like,
Okay. What do you usually do?
I sell cash secure puts.
Oh, okay. And you just make passive income basically.
I mean, What's your definition of passive income?
I mean, like over time, you're collecting premiums, so you're making money, like over time, kind of.
Okay, yeah, sure, yeah. Sometimes,
Okay.
sometimes in a couple of days, it'll jump up and I make 50% within 2 days. So it's kind of like
Yeah.
buying options in a way, being
Yeah. I
bullish
feel like
in a sense.
yeah, that's a pretty good strategy. I was also gonna ask you one last question. What do you think the best? I mean, since you don't know how to day trade, I was gonna ask what's the best time frame to day trade, I guess, in your opinion, like the best time
5 day,
to.
15 minutes. I know how to do it. I
Okay.
just don't do it. I'm not very successful at it.
Oh, okay. I see. I see.
I mean, I know
Okay. So
basics, but again, I'm not like Tilio is probably the one if you really want to understand day trading, Tilio is probably the man for the job for that one because he day trades and scalps. He's a monster at
yeah.
it. So I'd say
Uh,
he's probably the number one guy here in terms of day trading.
yeah. Thank you. Yeah, I've been following his plays. It's been pretty good. But thank you so much. Thank you so much for having me. Have a great weekend.
Yeah, you too. No problem.
Okay. Thank you.
Okay, Miles.
Hey, when doing your stop loss and your take profit, what should be your risk to reward ratio? Should it be 1 to 3, 2 to 4? I don't know which one.
I wouldn't even do that. I would say that you should just concentrate on percentage and make it simple. Overcomplicating it with ratios and stuff. I mean, and honestly, with ratios, you're probably looking to take in a lot more profit than is realistic.
Mm-hmm.
So I would recommend just stick to percentages. Keep it really simple. Simplify trading because when you can simplify and you can make money consistently with simplification, then building and adding to simple stuff that can generate additional returns. But uh, try to simplify everything that you can. And when you can figure out a way to consistently make, say $500 a week, something like that, then I'd say you've made it to the next level. If that makes sense.
Okay, thank you.
You're welcome. Okay. Let me get through this chat section here real quick. I have been meaning to make a video on stop loss or whatever. I should be doing that here pretty soon. I got about 3 to 5 videos I wanted to make here in the next couple of weeks. So hopefully I'll get that up for you all that wanted to know how to set a stop loss on TDA and stuff like that, or at least TOS. Let's see. Joseph Martinez asked if I buy individual stocks. Yes, typically 100 of them at a time if I can. I can sub premium on them if I need to. Let's see. Oh, I'm not sure. Out of the three that raise their hands, I'll just start at the top. Austin, go ahead.
I wanted I wanted to know, do Tilio have videos? Because I'm new here, like I just joined like 2 days ago. Do
Nah,
Tilio have videos where he talks more about options and what he does and how he charts stuff, how he makes support and resistance levels and so forth and so
he
on?
doesn't really have
So where
videos.
can I access it?
I think he does like live trading sometimes on the VC chat. Um, he doesn't have anything that I'm aware of though. I'm the one that has most of the videos that talk about, you know, support and resistance and um, Greeks and certain stuff like that. So that's all I got. Sorry.
Oh, I'm sorry. Can you repeat that? Because I had my computer on mute and I didn't even realize it. I was wondering like why was he talking? My bad.
Oh, I was just saying that I don't think Tilio has any videos. Typically, I see him sometimes doing live trading in the trade floor during the day, and he'll talk about his positions and stuff and that kind of thing. Um, I'm really the only person that I know of that makes videos, educational videos so far. Um, so I mean, I don't know what else to tell you on that one, unfortunately. Just maybe wait for more of my videos to be produced and catch them on YouTube, right? I mean, that's because I mean, like, a lot of what you're asking, I'm either looking to make videos on some of that stuff or I have made videos on some of this stuff. So definitely check out the links I have on either the lecture channel of mine the or blah or under the education section. I have a channel. Um, was that all, Austin?
Yeah, yeah, because like for example, when I went on TradingView to look at, because you said to draw your support and resistance levels on the 1 year chart. So when
Mhm.
I went on there, it only had the 1 month chart.
Um, so I think it's like 1 year, 1 week is what it ends up being. You said you're using Webull, right?
No, well, actually, I'm on
Oh,
Robinhood right now, but
ooh,
I'm about to switch to Webull. Well, I'm actually sending my stuff over now. But the thing is, I wanted to go on TradingView to, like graph and do
oh,
stuff.
okay. I'm sorry, you said trading. Yeah, you're right.
Yeah,
Okay.
TradingView. But when I went onto the thing, it only had 1 month, but it didn't have the 1 year that I could go to.
Gotcha. I'm not familiar with TradingView. I know Mario94 uses that on a daily basis. Reach out to him. I'm sure he can answer that question.
Okay. And do Tilio, I know he don't post any videos, but do he do like one-on-ones or anything like that? If you
I don't think so. I mean, he may or may not, depends how he feels. I mean, I can't answer for what he would be willing to do. As far as the server itself in general, there's way too many people asking for one-on-ones. So there's no way we could even like fill that, right? We'd have to like create a class specific to everybody's questions and then try to, form it in a way so that, you know, 50 people ask questions about this type of thing and 50 asked about that. And so it's a tricky situation. And that's kind of something for us as far as staff goes that we're kind of, at some point, we're going to probably have something very formal and educational, such as a class setting, whether it be virtual or in person. Um, Unfortunately, that doesn't help you right now, though. So hopefully that's, I guess, answers some of your questions.
Yes, and you said that you have videos for support and resistances that you're about to put out.
It's already on my channel on the server.
Oh, how do I access it?
You just go to the channel and click on the link.
The channel. It's on Discord, or you saying
Yes,
YouTube? Or-
no, a Discord channel with YouTube links.
Okay, I'm new to Discord, so I don't know. Is it what tab is it under?
Okay, so go scroll all the way down. You get to the bottom. Um, there's a section that says recorded lectures. If you click on my name, Hostel,
Once. Okay,
there's
class.
it's in there somewhere. Let's see. You can probably just do a search in the search bar once you're in the channel. And let's see.
Wait, what did you say it was again? Professor Haas?
Yes, yeah, that works. That one's fine too. Professor Hostel under the education tab. That one probably you'll um, find it a little easier because it's recent. You can also look in the pinned messages. 100% you'll find it in that. I pinned all of the videos that I've produced in the pinned section, so you can find those easily.
In the pen section.
Yeah, of that channel, you go to. Are you on the mobile or are you on
Computer.
computer? Okay, so on the top right, here, make this simple. Screen one.
Oh, it says pen messages.
Yeah. So here on the top right, there's a little pin, and you click on it, and it shows pinned messages, and then you can just scroll down. It's a little ways down here. It's somewhere here. Let's see. Resistance and support videos right here on the 11/29/2020 is when I posted them.
Oh, okay. Thank you.
You're welcome. Okay. All right. P4. Go ahead.
Hey, Hostel, how you doing?
Not too bad.
Hey, quick question for your Roth trading account. Do you hold some positions long and just don't touch them and then trade other things, or do
No.
you pretty much trade everything in that account?
Everything is traded.
Is it? Okay. That's all I got.
Okay. Okay, Manuel.
Hello.
Hey.
Hey, how are you, Hostel? Quick question for you, man. I'm a
Okay.
brand new trader, so I put in my Robinhood account since I just started about a month ago, about $5,000, and my strategy that I'm thinking is 60% put it into stocks like strong stock like Apple, Microsoft, and these types. Use another like 20 to 30% on like the medium risk type stocks, and then have about 10% to play with in options since I'm not familiar with options that well. What's your opinion on that?
I wouldn't do any of that. I would take all your money and trade shares and flip them.
Okay.
Don't go long on anything. Flip everything. Take profits on everything you get into. Exit. Find something new. Continue doing that. Build your account. Compound your account. Right. And as you're doing shares, you're going to learn things that you need to learn that are vital when doing options. So I think you should start there, especially as a new trader.
Right. That's why I figured I'd join a Discord and get help from people like Tilio that actually have a lot of experience doing options and stuff. Okay, that's all I have for now.
All right. All right, Danny.
Hey man, what's up?
What's happening?
So I got a question, kind of like Peter's. I know I've been to enough of your lectures to know that you don't like to hold things for long term, and you think that flipping everything can make you more money. And I know that's your strategy. I guess my question is, I know that's how you do it and that's how you believe it, but do you think it's a bad strategy to hold shares for growth?
I mean, no, it's not a bad strategy by any stretch. You're going to make money. I think that if you sit on it and let's say you've got, I'll use Tesla as an example. I got a friend at work that's been that has a lot of Tesla since it was really cheap. Yeah, and his whole argument is like, well, I got these shares for long term. I've been holding them for this long, and they've made me all this money. And I'm like, well, they didn't make you shit because you're still holding it. You didn't make anything, right? Until you sell those shares, you didn't make anything. Right?
Yeah,
So,
but you sell them eventually.
well, here's the thing: is at what point do you sell them? Number one, but number two, why not take advantage of all the swings? The market doesn't just go up.
Yeah.
You're not going to get into a stock and then it just goes up the whole time. It doesn't work that way. It's going to
Yeah.
go up. It's going to go against you. You're going to be red. Then you're going to be green. Then you're going to be red. Then you be green. I mean, it's over time, the long run. Yes, the trend is up for everything, in my opinion.
Yeah.
But short term, year and less, the stock market does it swings. Take advantage of the swings. Like I did some math for my friend with Tesla, and I showed him out of all the times that Tesla has had its movements, I could have realized the same amount of gains that he had and be in another position, right? My shit's realized, his is not, if that makes sense.
Yeah. Yeah, it does.
And when you realize a gain, that's how your account compounds and grows. And I believe in compound growth.
Yeah.
And holding something long term, there is no compound growth.
Yeah.
Here's another example. I did CSPs last month on quite a few things. I was up about $4,000, I think, and I wanted to own shares. My goal was to own the damn shares, right? And I could have got out of every position I had and made right around $4,000, but instead, I wanted to go long and hold these shares so I could sell covered calls on them. And I'm down right now by like about $2,500. And mind you, when I could have sold, that was a high in that time frame. And then it dropped lower than I got in with my CSPs. So now I'm down. Not only was I up a lot, now I'm down and below the premium that I was paid. So I'm so far in the money that now I'm negative in profit. And I got assigned shares. So now I'm sitting on stuff that I could have flipped once or twice at least. I could have probably got into another handful of plays. But here I am bag holding something.
Yeah.
So, that's my whole argument is why not compound the account instead of letting something sit and be unrealized gains? Right?
Yeah. I mean that makes sense because I know FaZe holds long term.
Yeah, he has that strategy. He likes to sell covered
Yeah.
calls on long-term shares, and I get that. I understand why he does it. Me personally, I think he could put his money to better use and do
Yeah.
something else. But again, everybody has what works for them, what they're comfortable with, what they like to do, right?
Yeah.
And I don't necessarily say, don't do long-term shares because it's not going to make you as much money. If that's what you like to do, then by all means do it. But if you want to make more money, then flip it.
Yeah.
Period.
And the reason I ask is because I'm trying to come up with, I guess, kind of a plan for my Roth. I haven't started to trade it yet. I'm trying to get more confident in just my regular brokerage to start messing around with my Roth. And everybody's always like, no more than 50% in. And I know you're like, when you're doing shares or the strategy that you do, it's a little more safe, so you can go a little bit more than 50%. My thought there was, hey, I'll trade, 50, 60% of my account. I'll keep 20% of my account cash. Then I'll take the last 20% of my account and put it in, some long-term ETFs, just so that little percentage of my, account is just always going to be there growing, instead of just sitting on cash. I mean, that was kind of my theory, in my head, what I had.
Well, I mean, I guess you could do that, but you could take that 20% and put it towards flipping stuff and make a hell of a lot more money.
Yeah. Yeah. And I guess the reason I thought like that is, again, because everybody's like, make sure to have cash on hand, 40% cash, trade 60, or 30% cash, trade 70. And it's like, if I'm going to have that cash sitting there, like, why not have that cash in something that can grow a little bit over time? Obviously it's going to go up and down, but the majority of the time it's potentially going to grow. That was kind of my thinking of it.
Well, the whole idea of money sitting is not because you want to have money sitting. It's because you don't
So you
want
can
the
average down.
exposure.
Yeah.
Well, no, you don't want the exposure.
Yeah.
right? And you don't want the exposure. Like this recent pullback, um, had you got in at highs and you got in with 60 or 70% of your account, you can't average down enough to make that break even fall fast enough to where you're in profit already. You know what I mean? Like
Yeah.
it takes a lot longer. So with shares, like I said, I think it's 50% is the max that I would go. Unless we're in a situation where we are like right now, where I think we've kind of hit a bottom, in my opinion. The market's gonna start moving back up. By summertime, it's gonna be booming. This would be the time I would say you could go 70 to 80% heavy, right?
Yeah.
But when we're at all-time highs for a bunch of stuff, and we're in a month that's historically known to pull back, you probably want to be closer to 25 to 35 in the market, if that makes sense.
Yeah.
So you
That
kind of
does.
scale back based on the time frames of the year and when the market is generally anticipated to make a certain move in a certain direction, because it always does. You just can't pinpoint when.
Yeah. I got one more quick question about the Roth. So I just put 6 grand in for 2020. So obviously I can contribute to 2021 right now, but I don't have 6 grand. Is it, I can afford to throw 500 a month at it. But do you suggest waiting until I have another 6 grand to put in, or do you suggest throwing that 500 a month in there?
Or are you going to actively trade what you throw at it?
Right now, no, it's just sitting in a growth stock.
I mean, if you're not going to, I mean, the point of putting money in there ASAP is to get it in the market or to get it
Yeah.
doing something. And if
Yeah.
you're not really going to do much with it, but it sit there, maybe just throw it in a
But-
savings account. Or I mean, it's not going to hurt for you to throw it in there.
Yeah.
It's a savings
Well,
account in general.
let's say I was trading it. I mean, is it worth it to put
You
that
want to get in
500 a month in
faster.
there?
Yeah, faster. So you can
Yeah.
compound more money with. So like,
Exactly.
if you wait till the end of the year to put 6 grand to make it a total of 12, or you
I got
start
that.
putting 500 every month, you start at 6,000, put 500 in January, now you're at 65, and you make
Yeah.
10% on that, right? And then you make another you put another 500 in February, so whatever the 10% of the last amount adds on top plus the 500, now you make 10%. You see what I mean? That's the beauty. That's how compounding works, right?
Yeah.
This is how we really make money, and I guarantee compound swing trading is going to make more money than long-term anything. I don't care how high a stock goes. I mean, it could be Amazon, it could be Apple, it could be whatever. You got in it at $10 for Amazon, and it's at 3,000 now. If you would have held that position all the way from $10 until now, yeah, obviously you're going to have a lot of money, but it's not going to be as much as if I had swung that position from $10 all the way up to 3,000.
Yeah. So let me ask you this real quick. In 6 years, when you have millions of dollars in your Roths, are you not just going to buy shares and let it sit? Or are you
No,
going to
no,
trade
no.
that whole account still?
So once I get to a certain point, so my goal is, say, a good chunk of my portfolio is going to be cash secured puts.
Mhm.
And then, I'd say maybe, I don't know. This is kind of really just off the top of my head. So maybe 30% will be cash secured puts. And then I'll do about the same, maybe a little less. Or, I don't know. Shit. I don't know. If I get to $1 million, or let's say I get to $5 million, let's say that's the number I'm at. This is when I start allocating by dollars, right? So
Yeah.
I'll probably do $1 million to $1.5 million in options, and then I'll probably do anywhere from $1 million to $3 million in shares. Just depends on the time frame of the market, where the lows are. So like, I'll get into a bunch of CSP positions and then just let my theta decay and do its thing. And then I'll always be on the radar looking for stuff that is at lows or at really good entry points, something to swing.
Mhm.
And like Nvidia always hits good areas, AMD always hits pretty good areas, Netflix does. those are pretty expensive stocks, but you can only trade them if you get a lot of money. And like Tesla, beautiful, beautiful one to trade off of support because it flies. So I would allocate actually more money to shares once I have a lot of money, because I can just chill. I can set limit entry orders, limit exit orders, and never look at it again, right?
Yeah.
I mean, I would obviously keep an eye on all my positions, but it's not like options where I have to go, well, do I need to roll? Do I need to do this? Do I need to do that? You have to manage the position. Shares, I just enter, exit, right?
Yeah. But even at that, even at that account value, you're still not buying shares just to hold for 10 years because you think
Nah,
that, yeah.
Not
Okay.
at all.
Cool. Yeah, that was all I had, man. Thanks.
Yeah, you're welcome. Okay. Let's jump to Larry, and then we'll go to you, Peter.
Hey, so kind of just building off of the previous question, I'm currently kind of dividing the portfolio in terms of not so much hedging, but kind of just protecting myself against myself, where I have a portion of it that I'm using for day trading, option trading, and then a portion that I was thinking was protected, long term. So, for example, I have shares in SPY, in Apple, in Adobe, and those three in particular are up pretty significantly. SPY, I'm up 28, almost 29%. Apple, 21%. Adobe, I'm up, 133%. That one in particular, I feel kind of goes to the example you gave of your friend with Tesla. It's one of those situations where, I feel like, how could I ever get back in? Like if I were to sell Adobe that's currently at 504 and I bought in at 215, how could I ever get in and realize more profits? Like, so I guess it's a little bit of a mental hurdle, but just wanted to get your take. Like, is this one of those situations, like you're saying, like just get out and make money somewhere else? Or is it so far gone that it's kind of like, okay, it makes sense. This is a strong company. Might as well just hold it long term.
Well, I don't care about long-term strength. I really don't. I'm interested in movement. When the stock moves, I make money, right? And I need it to happen sooner rather than later. What was your first question? Sorry.
Really, the question is, should I liquidate? Should I free up capital?
And how do you determine when to get in and out and do all that? Okay, so support and resistance. It's that simple. Support and resistance. Something, let's say, for example, Adobe. When you bought it at 250, I think you said.
215, yeah.
215. So let's say it had resistance at 250. So you got at 215, it had resistance at 250. You got out, right? But then it fell, it had support at say 225. You got back in. And then it jumped up and hit resistance at 275, but you got out. And then it fell, hit support at 240. Then jumped back up to 315. You got out again. You see where I'm going with that? You can make a hell of a lot more money doing that than holding that position. You're gonna make 4, 5, 6, 700% instead of 100%, right? Because if you cycle it,
do you think a
retracement
do you think a retracement that drastic would be feasible? Like, I guess
it's just an example.
What's stopping me in particular with this, for example, liquidating Adobe, is just the thought of it'll never be this low again. Like even through a tough time or something, like I can't imagine it just losing 50% of its value.
I mean, so you're saying like when it was at 215, you're like, I'd never see it this low again. I don't want to sell at 250 is what you're saying.
I think I got lucky, to be honest with you. Like when I bought it, I was starting off, and I've joined a few of these, and we've spoken about the cash secured puts. That's really how I got started. And this was kind of just one of those safety nets where I was just gaining my bearings. And I was like, well, I know Adobe, so I bought, a handful of shares, And really it just kind of happened to take off. And when I do go over the chart, I did happen to just get in at a really opportune time.
So, again, doing that could potentially work for you in your strategy, right? However, let's say for a second that yes, okay, you want to get at 215, you think it's going to go to 500, right? You're like, this thing, I know it's going to go up there. I'm willing to hold long term. If you're going to go long term hold, get 100 shares and sell calls against it at resistance and flip that. It's the same thing, right? So instead of buying and selling 100 shares, just buy the 100 shares and then sell calls at resistance. And then the moment you see profits, even 10, 15%, you take it off the table and then it's going to jump again. Because if you're really confident in the stock that it's going to go to 500, then you can find every resistance level and sell calls on every single one of those levels. And I guarantee you, every one of them's going to get hit. Every one of them's going to push back. Every one of them's going to pay. It may not be big amounts. You might see $100, $50, $125. But if you're flipping contracts pretty regularly until it hits 500 profit target, number one, I never get into a trade unless I have a profit target. I don't get into anything until I know where I'm getting out, right? Because that to me, that's not a sound strategy. You get into something and then you're just open-ended, holding it forever. Like you have no exit strategy, right? That's one mistake most traders make. They'll get into something, they'll be like, oh, it's going up to the moon, it's always going to go up, I'm going to long hold, and then it goes against them for 2 years and they're bag holding and they're upset and angry. Trust me, I know, I've been there. I've been in that position. I got into something with that same mindset. I'm gonna long hold this. It pays dividends. I think it's gonna go to this number, and it went half that number, and then I bag held for 5 years or 10 years, whatever I bag held for. So again, I think exposure to the market in general needs to be as limited as possible because it doesn't always go up. And if you can get in and out with profits every single time, especially with certain strategies like buying and selling shares, selling cash secured puts, those strategies are going to get you in and out with profit every single time unless you're greedy, right? So I don't like exposure to the market, right? I like my $100,000. I don't like it in the market. So when it's in the market, I want to get it out. And when it shows me profit, that's when it's telling me, here, now's the time to take your money out. Because the market's going to go down. It's not always going to go up, right? We've seen it just recently, in the past 3 weeks, right? Or 4 weeks, whenever March, I think is when it came down. Early start of March. We've seen it. It goes backwards. This is the time where, prior to that, let's say Adobe was at 500, and you're like, this is a really strong high level. And knowing February, March time frame is bearish, then in my mind I would say, because I know that, I'm going to get out of this because it's at a high. And if it falls down to another good support level that I think's good at getting into, in a month from now, I'm going to get back in. If it just stays at 500, I'm going to put my money elsewhere, right? It doesn't matter what stock you put your money in, you're exposed. And when you're exposed to the market, you're susceptible to a black swan event like COVID, where everything goes down and you lose on everything, right? So limit your exposure, get out with profits. If I had done that the whole time I've been trading, I would probably have 3 to 4 times what I have today. You don't know how many times I've kicked myself in the ass saying, should have took that profit because now I'm down lower than what I was when I entered it from the get-go. And that was up 25%, 30%. I was looking for 40 or 50, getting greedy.
But now in that situation, because I've found myself there too, but with smaller numbers where I see 5-8% profit and I'm like, I can get 10, I can get 12, and then it reverses on me. So I've had a hard time kind of grasping like what is that that middle ground? What is that right number where you're not greedy, but you took the profit? You know,
Let me
because
ask you
sometimes,
this.
I mean, 5%, 8%, it's not really a lot. Was it worth the risk?
When you saw that 8%, what did you first think when you opened your phone or whatever it was that you looked at it and saw it? What did you first think? What was your first reaction when you saw it?
My first reaction is it's going up. It's going to continue. You know, the bullish mentality.
Well, no. I mean, like when you looked at it, you go, "Oh, I'm in profit," or "Oh, it's not really up that much," or "Oh, wait,
Yeah, it was.
I'm up more than I
Yeah,
thought." Which one was
no,
it?
it was. Oh, I'm up.
Okay, so when you're surprised, I guess that's really what I'm after. When you look at your phone, you see profits, and you're surprised, you raise your eyebrows. That's when you get out. You know how many times I've raised my eyebrows and I said, I'm going to keep holding it because I think it's going to go up. And it went down. I would increase my frequency as to which I'm in and out of the market and increase the realized gains in my account. And instead of trading 5 grand now, I can trade 5,500, for example. Right. If I make, if I've got 100,000, if I make 3 grand, now I've got 103,000 to trade, if that makes sense, right? That's what you want to do. You want to take the money that you're compounding and just add it to the pot and grow that number more.
Yeah, but
Realize those compounds.
I agree. But in an example like that, so you take 100,000 and you made 3,000, but you're looking at it percentage wise, and it's like, oh well, I was only up like 3%. $3,000 is a lot of money, but then percentage wise, when you're looking at it, I don't know. I guess there's a feeling
Well,
of,
that's not the
especially when you're
percent
looking at
of the
like
total
Tilio and
of the
stuff.
position, right? So
Hmm.
if I made 3% of my total account, I made a lot more on that position. Think about it. Because that position might have only cost me 5 grand or 10 grand. If it cost me 10 grand for that position, I made 10%. Like, so let's say 3 accounts. I have 3 accounts and I mirror all of them. And let's say I've got 90,000. Let's make the number easy to remember. So I got 30, 30, and 30, right?
Hmm.
And I make, what's an easy number? 3,000, I guess. That'd be 3%, right? Is that 3%? Hold on. Fuck. I'm really bad
Of
at math.
30,000, it'd be 1%.
Sorry. 30, sorry. 1,000 divided by 30,000. 0.03 repeating. So 3%, like I was saying. If I make 3% on each $30,000, the total account value percent return is 3%, right?
Hmm.
So if I make more than 3% on that account, and how do I explain? So let me back up. I'm sorry. So let's say I put in, out of that 90,000, I put in $9,000, right? And I
Hmm.
make $3,000 on that $9,000. Okay, that's a little high, but let's just assume for a second, for ease of math and calculation,
Yeah.
that's still a 3% return on the, or right around that, or 3.3% return on 90,000. But for the money that I put in, the 9,000, that was a 30% return. Right? So if I do 3 or 4 of those, my 3% goes up, the total account value. So when you make 2.5% on your total account value, that's a massive number versus 3% on a trade. If I made only 3% on a trade, that's really small. When we start talking about account size, I made 3% of my total account. That's a lot more money, right?
Yeah.
I mean, you follow? Are you following?
Yeah.
Like,
No.
okay.
Yeah, I follow. Yeah,
Right.
that does make sense. Of course, like reflecting the size of the account, then yeah, that would
Yeah.
be a lot more money. But my thing, I guess, it's not full on FOMO. It's more about just the trade itself. You know, thinking exit plan wise. Okay, well, this is gonna bounce here at this resistance or at this, VWAP, whatever, and I should get 10%. And you put the order in and it never gets to 10%, then it's like, all right, well, was I too greedy? Then the next play I get out at 5% to cover myself, and then it runs to 10, 15, sometimes 50. The other day I took 8% profit on something and the play ran to 100. And it's kind of like, all right, well, what am I doing wrong?
Um, I would say experience is about the only thing that's going to cure that ailment. Um, being able to know when to look at something and say, this has got more room to run or it's going to run out of steam. I mean, that's hard to explain. It's more or less like when I see something or when I have a feeling like the LMT that I was going over is something I'm intimate with. I've known it for a long time and know how it reacts. That's something I can tell you. Yeah, it's going to keep going. Hold, right? I mean, I
Hmm.
called it out. I said um, it's going to breach 370. My profit range is going to be 370, 380. I'm going to set a stop loss after 380 because that's where I'm happy at profit. And it ran to 386, or I'm sorry, 390, and then the trailing stop initiated when it fell $3, right? So I had a strategy and a plan in that, and I think that's really the most important thing to understand, right? Hopefully,
Just kind of be satisfied with the plan playing
yeah,
out.
yeah, exactly. I mean, you're not going to go broke making money, so that's number one. If you're making money, if you're not losing, that's the second thing, right? I mean, I always tell everybody it's not about how much you can make, it's how much you can not lose. Because if you're trading and not losing, you're making money.
Yeah,
So prevent loss and you will automatically create gain.
that makes sense. That's a good mantra. I appreciate that, Hustle.
Yeah, of course. Is that it? You good? Okay, I guess you muted yourself. Okay, so Peter. Peter was next.
For the 50% in the account, so do you use that also to average down if there is a major event, or are you just
Yes.
holding that no matter what?
So if like COVID happens or like this recent retracement, that's what I would use the extra 50% for to, and I probably try to use 50% of that 50%. So I'm not
Hmm.
completely in the market because you being over leveraged and extremely exposed. That makes your money, it's more dangerous for your money, I guess is the best way
Yeah.
to say that.
Two more. Can
Yeah.
you put up something on a Discord or something for like the season and sort of by month, like bearish, bullish, and stuff like that, just to keep that in the back pocket?
Yeah, I
I,
can. It's very generalized. I don't want anybody, I haven't posted it because I don't want anybody to think of it as something they could follow indefinitely and not take it with a grain of salt, right? I mean, you know, it's it's a
the
relative
guideline.
thing. Yeah, it's a kind of
Yeah.
a relative guideline, not anything more than that. And I would say don't use it for that, right?
Hmm. Okay. And
So
then
I'll send it.
one last thing.
I'll
Do
post
you
it.
trade every day, or do you like put in your trades, say like Monday, Wednesdays, and Fridays, and then just monitor the positions, or are you literally trading every single day?
No, I don't trade every day. Definitely not. I don't have time for that. A lot, like I said, a lot of my positions are CSPs, so I get into those because I don't have time to trade every day, and I'll sit on them and they'll make money for me. And then while I'm at my job, I'm making money doing this while I'm not looking at it. So that's why I love CSPs because I'm getting paid no matter what. I mean, if it goes against me, then worst case scenario, I just own shares. So
Okay. And you said you usually sell them out 30 to 45 days.
Yeah, I like the 30 to 45 day contracts because the premiums are pretty good. So
Hmm.
like if the stock pumps pretty hard in one direction, if you got a month 30 to 45 day out contract and the premium's going to be pretty decent, it pumps pretty hard in one way, you're going to see a good return. So that's something you want to get out of, right? But if you're in a
Hmm.
position that's like a week away and it's got like, so let's say the monthly is giving 500 to 700, but the one that's a week out is giving you like 100,
Hmm.
and you get in it today and then in 2 days it rips the other direction. Well, that one that was paying you 100, you're going to probably see 70, $60 of profit. But the one that was paying you 500, you're going to see 250.
Yeah.
So it's going to be more money at play for the same position because you're selling more time.
And then your cash secured puts, you're waiting for a support and you're just selling it pretty much at the money at that point.
Ideally, yeah,
Okay.
that's ideally what I like to do.
Yeah.
Do I
I'm
always
sure
get
it's like,
that? Not
yeah.
always, but
Yeah, I get it. Okay. All right. Thanks, man.
cool. Okay, Manuel.
Hey, yeah, I wanted to ask you, what would be your like, if, let's say you were starting to trade stocks today and you're just learning about it. So I mentioned earlier I had a $5,000 portfolio and how I spread out my portfolio and like 60% of like the more secure stocks and things like that. And you mentioned to invest in and flip them as soon as possible. So would you mind giving me like an example of how would you start if you only had a month of experience?
I
Like
would
what
learn.
stock that and all this stuff?
I would learn support and resistance. Number
Yeah,
one.
just looking at that. Yep.
Number two, I would pay attention to all the analysts and come to all of the lectures and build your watch list with that. Because trying to go out there and find tickers and find this and find that, it's not easy. I'm not gonna lie, it's not easy.
Yeah.
I mean, it's
Yeah.
taken me a while to get the list I've got, and I got it from um, word of mouth, really. Yeah,
Right.
I'm not gonna lie, I got scanners. I found stuff like I found quite a few things with my scanner that's found really good stocks, but for the most part, I'd say 80% of my watch list is stuff I've found from other people. So trade shares, learn support and resistance, come to all these lectures, educate yourself, virtual trade, get off of Robinhood.
Right. Let me ask you this. Let me ask you this. Would you have a whole bunch of stocks to try to trade, or would you like stick to having like three, let's say?
I'd stick to the less the better because if you can get intimate with like 5 stocks, um,
Hmm.
and really understand them and know how they move, then that's something I would say. You're going to make a lot more money doing that than trying to trade things you've never traded before or never seen before or heard of, right?
Right.
So it's like, you go to a job, you're new,
Hmm.
you just started your job, you don't know how to damn do anything, right? You walk in there and they're like, all right, here, fill this paperwork out. And you're like, all right, I don't really know what I'm doing. What's this, taxation? I don't know, right? But you've been there for a year. Now you can do everything with your eyes closed. You dream about this crap, right?
Right.
That's same thing is going to happen for you here. It's going to take time. You're not going to get it. And this is something I say steep learning curve, right? 6 months to a year before I'd say you will see success. Now, don't get me wrong, some people will definitely see success sooner, especially if you take the right advice and do the right things.
Right.
But the average person with no help but has initiative is going to take 6 months to a year.
Right. Okay. All right. That's what I wanted to ask.
All right.
Yep.
Cool. Okay, Austin.
Hey, I wanted to know, how do you prepare to trade a stock? Um, like for example, do you look at stocks the day of? Do you look at it weeks prior? Do you like, how do you find stocks and say, okay, these are the stocks that I want to trade? How do you know that, like, these are the stocks that are the best stocks to trade? Do you recommend any particular stocks that you tend to trade most often?
Well, it's not whether or not something's better than something else. Um, Number one, I try to trade things that are very active, very liquid, very known. Companies that aren't going to get crushed for any reason at all. Things that have been around for a while. Typically, now don't get me wrong, there's things like PLTR, Fastly that I like, that I trade, that are new. But I believe in what they're doing. Like QuantumScape, I like them as well. These are all tech companies, right? I like tech. Tech's fast growing. Um, but I was kind of going on a tangent there. Kind of forgot where I was going. What was your question? Ask your question one more time. Sorry.
Oh, I basically said, what particular stocks, like, do you recommend any stocks? How do you prepare? Like, do you say, okay, you look at the stock and you get in on the stock the day of? Do you look at the stock weeks prior? Or how do you
Okay.
determine?
So the stuff in my watch list I look at daily or every other day, pretty frequently. Let's say that. And if I notice something that is at a high and it reverses and starts going to a downtrend, I start looking for support levels for that particular one. And some of the stuff that I look at, I say, okay, yeah, if it hits this support level and breaks through it, I'm gonna have an alert set on my broker that's gonna send me a text and say XYZ has crossed this threshold. Then I go back in and say, all right, now that it's broken through this threshold, if I'm doing shares, I'm going to start setting limit entry orders. I'm going to ladder them in, meaning if I've got $5,000, I'm going to throw $500 to $1,000 at it at every support level, right, until it takes up my $5,000. As far as when I trade, I mean, again, I just set limit entry orders and it does its thing. Like, it could be tomorrow, it could be a week, but it'll do what it does. Most recently, I had something in the precious metals market. I didn't think it was going to hit this low that it did, and I set a limit entry order anyways at it. And I think it was last week, like Friday, I got an alert saying it initiated. So I'm like, oh shit, I actually got the price I was looking for because I know it's going back up, right? So, limit entry orders are amazing in that sense that I kind of set it and forget it. And if after a month or two it's still there, or I need the capital for something else, I'll cancel it, you know? But it just takes a lot of legwork. I mean, this whole stock thing is it's a shit ton of legwork. Under my name on Discord, it says never ending research. Like, it does not end. It does not end. Like, you can research companies to your grave, right? So spending your time in the right place, spending your time on the right things, and I can't tell you what's right. What I trade may not be right for you.
Do
Right?
you personally, do you pay attention to the news, or do you just
No.
look at, okay, these are the supports and resistance, and this is the only thing I'm paying attention to, like, forget the news? What do you do?
Yeah, I pay attention to support resistance, but so news is important, but I don't trade pre-news. So I let the news happen, let the stock do what it's gonna do, and then I get in, right? So if typically how news works for me is I'm already in the position and it goes my favor, right? That's usually how news works for me. I don't try to beat the news. I don't try to get in and then play the news and be like, all right, I'm gonna make a lot of money off the news, because it generally never works that way for me. It might work that way for you or somebody else, but for me, I don't. That doesn't work. what I have to do is look at the chart. I like this level. I don't give a shit what news, as long as it's not like really bad news, right? It could be negative news, but as long as it's not going to be something to bankrupt the company or cut it in half, it's fine with me. Because bad news for me means a better entry. So that's typically what I look for. Like, if there is news, I'm hoping it's bad because I want the stock to drop so I can get in, but not too bad.
Yeah, because I was like, for example, I remember not too long ago, I was, but also I'm a beginner as well. I was doing an auction, I believe, on Tyson Foods, and I thought it was going to go down because it was something about a lawsuit that was taking place. So I thought it was going to go down, and it went up, and that really confused me because I was like, how can a company be going up? Why would people want to invest in it? Yet they're getting a lawsuit.
Well, that's the thing is that's another reason why I don't play news, because you could be so convinced it's going to do one thing and it'll do the opposite. And there's nothing, like, there's no way to determine how that even happens, right? So that's another reason why I don't touch news, because it's a 50-50 chance. And at that point, might as well go play some roulette. Let's go to the casino and drop 10 grand on red or black. You know what I mean? Like, it's no different when you're playing options, especially buying, because you lose your money no matter what if it doesn't work for you. And roulette's the same thing. You either hit it or you don't. That's what news is. You either hit it or you don't. So I don't mess with that. I like let the news play out. If it's great news and they come out and they start pumping, if you missed it, whatever. If not, if there's a resistance point and it breaks through that could be a good entry. I don't know. I don't mess with news.
And another thing that I had a question on is that I heard people talk about things, something called a pump and dump. So I wanted to know, like, what is that, and do you play that? Because I don't know, like, people were talking about GameStop, and I remember when GameStop was like pretty cheap, and then all of a sudden it just went up to, like, I don't know, couple $100 and just out of the blue. So, like, can you explain?
Well, that's manipulation. But pump and dump in general is the stock goes up, then it goes down quickly and drastically. And trying to play that, good luck. You're either in when it happens or you're not. There is no trying to beat time something like that. If you ever meet anybody that can, you let me know, because I'm interested in talking to them. I mean, seriously, like, it's impossible. If you can time the market, you can see the future. I'll be honest. Like, beyond that, nobody can time the market. Right? You can look at levels and say this is a good entry, and you can look at time frames and say it'll probably take 2 to 3 months, maybe sooner. But you can't be like, oh, in a week from now, that's when you want to get in. You know what I mean? Like, it's.
And can you explain to me what you meant by manipulation? Like, for example, would GameStop be something that would be bad for an investment right now? Like,
very bad. Yeah, I wouldn't touch that. I mean, manipulation just means that people are moving the stock in the direction with massive amounts of money and, manipulating it, right?
Okay.
Okay. Peter.
All right, I think it's the last one for the night. From last week with gap fills and stuff like that. So I was looking at Square, and then it had a gap to fill between like 260 and 280. And, I identified it and then pretty much just sat there and watched it get partially filled. Do you use just bodies of the candles when you do the gap, or do you use the wicks also, or what's the strategy for that?
Well, it's the same concept with any way I use candles and wicks. I mean, I like to use bodies if I can. Um, wicks work, but they're not as I'm not as confident in a wick as I am a body.
Okay.
So like
All right.
a
And
body may be like 65% certain, whereas a wick may be 20%, something like that. Just random numbers thrown at you.
right, and then in your past experience, like does the gap usually take, say, a couple of days to get filled, or are you watching other precursors when it gets to that point?
There's no way to tell, unfortunately. I just pay attention to the gap. I set alerts
Hmm.
for levels inside the gap, and when I get alerted, then I go look at it. Otherwise, I don't even pay attention to it because it's not worth my time. It's not doing what I want it to do, so I'm not interested in getting into it. You know what I
But
mean?
once it enters that gap, well, like what's your strategy? Say if you're on the
I look for
going up on
support.
a bullish trend.
So you're saying a gap that's at the bottom and then starts
Yeah,
changing?
so a gap down and then it's coming back up, say it's bullish, right?
Okay, so
So
I'll look for support, and if there's support nearby, that's probably where I'm trying to get in. If support's pretty far away from it, then I'll save the bottom of the gap,
okay,
or
all
maybe
right, I got you.
slightly below it. You know, it's like an extension on a candle. Let's say the support level is all bodies, but you got a couple of candles that kind of go a little bit lower. That could be a good entry point, especially, you know, that's like the very bottom. And typically, when something is falling like that and filling a gap, there's a good chance that it does breach further for a little bit and comes back up.
Hmm. Okay, cool. All right, thanks.
All right, welcome. All right. Anybody else has questions? Feel free to raise your hand and we'll run through these um, chat the chat real quick. So try and get through all these questions. Kevin Argueta, I think is how you say your name. True momentum indicator is similar to RSI. It only difference is it shows um, the red and green is the down and up trend. It gives trend analysis as well. Not a silver bullet though. Sorry. Oh, okay. I didn't see Austin. Go ahead.
I heard you guys talk about gaps a lot. So can you clarify and elaborate as to what's a gap? Is it like a big gap, just a big gap in price? I mean, it's kind of self-explanatory, but I need you to go into more detail as to, is the gap so and so, like for example, like if it goes up, you know, from $1 to $5, so that classify as a gap, or
Here's an
$5.
example.
What classifies as a gap? So I'm not just, you know, thinking gap, but it's not.
It's a gap. There's a gap in the price. There's no candles that intersect. It's just a gap in the price. If you look at my screen, the shaded area is a gap in the price. There's no bodies, right? Where there is a body, that's a gap between the two. Does that make sense? Like this right here, that's a big gap. And there's another gap right here. So those are examples. Hold on, I gotta unmute you. I gotta keep sharing and not sharing. Does that make sense?
Yeah, so after a gap takes place, does it usually go in the opposite direction
No,
following?
not always. It could go
Okay.
neutral.
Okay.
I mean, it could go lower and hit a support level. Just got to kind of pay attention to what it's got, where it's at, everything that surrounds that area, outlook, trend, market, overall market direction. I mean, a lot of those things matter, right? So you got to kind of take all that into account.
Okay.
All right. Anybody else? I'll probably end this one a little bit early tonight since it's Friday night. I don't want to take up too much of you guys' time. I appreciate everybody joining. I think this is a valuable class for especially new folks, because I always push shares for newer traders. There's just so much to learn trading shares. I I recommend against trading options if you haven't done shares first. If you can't make money trading shares, I guarantee you'll lose it trading options. So give it a few more minutes in case anybody comes up with a question. Well, I don't think anybody will. Again, thanks everyone for joining. Great questions. Any new questions or noob questions are totally fine. I don't want anybody to be nervous or feel like they're, oh, my question's too new. Don't feel that way. Always ask questions. You won't learn if you don't ask. So, hope everybody has a great weekend, and we will talk to everybody again soon. See you on the next lecture. Everybody have a good night.